Welcome back. Well, from the FMCG pack, Britannia will be reporting its numbers today. Mangalam is joining us with the key expectations.
Well, for Britannia, there are three key numbers you got to remember: 6, 3 and 17. 6% is the revenue growth that the street is working with, 3,040 crores odd. The other number that you remember is 3, which is 3% growth in the company's EBITDA and 3% domestic volume growth. The EBITDA that the street is working with is just shy of that 470 crore mark. That means a margin compression of 40 basis points, and the net profit of the company grows at 17%. Now, despite a muted revenue growth and EBITDA growth, the net profits grow because of lower tax outgo. The key things to watch out for this time around: the muted domestic volume growth comes in on account of weakness in rural demand, and the EBITDA margins compress, primarily led by higher input costs. The likes of wheat, sugar and milk prices have seen a bit of inflation. Over and above the numbers, the other number I'll be watching out for is the company's assets or advances that they've given to group-related companies or inter-party transactions with regards to loans, because that was the key concern as the balance sheet of the previous 2 quarters were also revealed. So any sort of movement on that is something we'll be watching out for. The stock trades at 50 times, so it is a little pricey, but let's see whether it be a good day or whether it will be 50-50.
All right, Mangalam, thanks so much for that. Well, Adani Ports as well will be reporting its numbers. Anisha, tell us, what do we expect from there?
Well, it's going to be overall a steady set, but versus the run rate that we have seen, there might be a bit of slowdown. And that is because we have been seeing how the exit rate has been weak. But still, we're expecting a revenue growth of around 13% for the number to come in closer to 3,000 crores. EBITDA is expected to come closer to 1,800 crore rupees. And that is because the margins are expected to expand to 61% versus 43% last year. And the profit is expected to jump up by 67%. Now, the numbers look better on a year-on-year basis because last year there was a one-off with the forex loss of around 570 crores, and that is what impacted the margins as well as profit last year, which is not expected this time around. But as I said, in terms of the internals, we're expecting a tad bit of muted set, because in terms of the volumes, we're just working with a growth of mid-single digit, and the number might come in closer to 55 million tons. And that is because, as I've been telling you, there has been low traffic data. In fact, we've already seen from the initial reports that we get in terms of ports data that volumes at Mundra were a tad bit lower. Even Hazira did not do too well. So the growth this time is expected to be led by Dhamra as well as Kattupalli port. Apart from that, there would be a currency movement of around 200 crores that might lead to a loss. So we'll watch out for that as well, whether there is a one-time loss in the numbers or not. And apart from that, logistics business will be important, because remember, they've acquired one of the assets from Adani Enterprises, so that will get consolidated. It might not have a big time impact on the overall numbers, but that is something we'll watch out for. In terms of the management commentary, Nigel, the key thing would be the management guidance, because last time they had said that they will meet the lower end of their volume guidance, but this time around street is expecting that they might have to cut the guidance, so we'll keep an eye on that.
Okay, all right, Anisha, thanks so much for that. Well, let's move on to a CNBC-TV18 exclusive then. Mark Mobius of Mobius Capital Partners says India and China will continue to drive growth higher in the emerging markets. Speaking to Manisha Gupta, he also listed the sectors and the commodities he's bullish on. Here's a snippet.
The multilateral trade agreements are pretty much over. In other words, a weakening of the World Trade Organization multilateral structure is not going to be what it was previously. In other words, there's going to be more bilateral agreements, simply because Trump has finally said, look, it's unfair, you know, what's happening with China and with some other countries. And a lot of other countries are now following suit. They're beginning to say, now, wait a minute, why do we sign this multilateral agreement which puts us in such a bad situation? So I think international trade is not going to stop, but it's going to be at a different level.
There is an economic slowdown globally. When you look at that, what is sense on what the Indian government needs to do from here on to push growth forward to ensure that the consumer demand comes back?
I think the number one issue is infrastructure spending. That India's got to get into the international market, issue bonds, even the foreign currency bonds, and which I believe they will be able to pay back at these low interest rates, and develop this infrastructure which will again create ability for the country to grow and export.
How do you look at the emerging markets right now? And if India were to launch a bond like that, do you see a lot of acceptance and a lot of funding coming that way?
Oh, you can see that's happening globally. a lot of the high-risk countries are issuing bonds at low rates. It's just amazing. You must remember, the euro is now at negative rates. So, you know, you have a situation where you have to pay the bank to keep your money. So this is a very strange and opportunistic possibility for India.
Okay. Just coming back to the emerging markets then, how do you see the emerging market growth numbers right now? What is your sense on where are we headed? And how would you look at India vis-a-vis the other EMs?
Again, because of India, because of China, the growth of the emerging markets, and of course other countries as well, but particularly those countries, the growth is about double that of the developed countries. I don't see that changing anytime soon, because you're seeing other countries coming up at a pretty fast pace as a result of reforms. Brazil, Russia's not doing too badly, and a number of other countries.
Within India, what sectors look attractive to you?
I would say, first of all, manufacturing, not necessarily export-oriented manufacturing, but domestic-oriented manufacturing connected to infrastructure spending, because the infrastructure spending is moving ahead. And I would say anything to do with consumer spending, because per capita incomes are going up. Those would be the two areas.
What's your sense also on currencies? You spoke about euro and how that was behaving, but the dollar index continues to be the choice of a safe haven currency, you know, given what we've seen around in this year as well. What's your sense on where's the dollar headed?
The dollar continues to be strong, and mainly because the equity market in the U.S. is still strong and getting stronger. That's one reason. The other reason is that some of the other countries have gotten into trouble for one reason or another. And so there's a desire by a lot of these people in other countries to get US dollars as sort of a safe haven. But that does not mean that the other currencies are not going to recover. You're going to see recovery of some of these other currencies.
We've seen Chinese yuan gain up in the recent past, but can't say the same about the Indian rupee, where we have seen some decline come in this week itself.
Yes, well, you know, it's interesting. The Indian rupee has been, from a recent historical level, has not been too bad. It's been relatively stable. And I think one of the reasons for that is the CBI has been quite conservative. The reserves are good, and so people see that it's relatively safe. I personally believe that India could issue an international bond, and therefore will put India on the international financial market, so to speak. In other words, it will become pretty well known, and that will be, I think, beneficial for India generally.
We've also seen gold prices give very good returns in this year, and the expectation that we perhaps are into yet another bull cycle here. What's your sense on gold? Where is it headed? How much should one be investing into that?
Well, I'm bullish on gold, as you can imagine. I'm not saying that gold is not going to go down. Of course, it's going to fluctuate. But I believe that people should have at least 10% of their portfolios in physical gold. And as I've been saying, that with the rise of cryptocurrencies, no one really knows what the money supply is. And you add that to the fact that the Europeans and the Americans and other countries have been printing like crazy, it means that the money supply has gone through the roof, and therefore the value of gold has to increase, because it is a kind of a currency with limited supply.
Okay, on that note, we